Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings before they make you lose your senses. Today, we're diving into an 8K filing, which is like a corporate breaking news report. Prepare yourselves, because this one involves a lending agreement, and trust me, those can get complicated fast. The report is dated March 26, 2025, which is when the reported event took place. Essentially, something important enough happened on that day for Golub Capital Direct Lending Unlevered Corporation to tell the Securities and Exchange Commission, or SEC, about it. This is a form they need to fill out to keep everyone in the loop with major events in the company. So who is Golub Capital Direct Lending Unlevered Corporation? It's a company based in Maryland. It looks like its primary business is lending money to other companies. Keep that in mind, as it is important to put what we are about to discuss in the correct context. The main point of this report is an update to a lending agreement that they already had in place. Basically, Golub Capital had an agreement with GC Advisors LLC, another company where Golub could borrow money as needed. This is called a revolving credit agreement, kind of like a corporate credit card. Now, here's what changed. Two big things happened to this credit agreement, also called the Advisor Revolver. First, the amount of money Golub Capital can borrow went up. It was $40 million and now it's $75 million. So that's a pretty significant increase in the amount they can borrow. The second change is that they extended the deadline for when the money needs to be paid back. It now extends to March 26, 2028. That gives them more time to use the credit and then pay it back. Everything else about the agreement stays the same. This report is just letting everyone know about these two specific changes, the increased borrowing limit and the extended repayment deadline. The company is providing the full legal version of this change as part of the filing as well. Since these changes create an obligation for Golub Capital, the update is required. The SEC wants to make sure investors are aware of any new debts or financial obligations a company takes on. Scroll first AXI Amendment to Revolving Loan Agreement Scroll. The full amendment is included in the filing in case anyone wants to read the nitty-gritty details. Now, what does all this mean? On the surface, it looks positive. Golub Capital has access to more cash and they have more time to pay it back. This could mean they're planning to make some big moves like investing in new opportunities or expanding their business, or it could mean that they need some more cash to cover some debts or operational costs. Here's where we put on our Warren Buffett hats and try to see past the surface. Why would a company that lends other companies money need to borrow more money themselves? If they are lending responsibly, they should be getting money back with interest to then deploy again. Are their loans not being paid back as quickly as they anticipated? Do they see a big opportunity and need more capital to take advantage of it? Looking at it skeptically, this increase in borrowing could indicate some underlying issues. Maybe they are having trouble collecting on their existing loans. Maybe their business is not as profitable as they want it to be. This is where further research and financial analysis would be needed to fully understand the implications of this increased borrowing capacity. Investors should definitely dig deeper into Golub Capital's overall financial health before making any decisions. In conclusion, this filing reveals Golub Capital's increased borrowing capacity and extended repayment deadline, which could signal growth opportunities or underlying financial challenges. Further investigation is needed to determine the true impact on the company's future. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please give us a like, drop a comment with your thoughts, and subscribe for more corporate filing deep dives.